Hey traders, hopefully you're having a good week so far. We're going to be jumping straight into the US dollar, looking at the Dixie, the DXY. We'll also be looking at Bitcoin, the Bitcoin dominance, as well as the US equity market, looking at the SPX. But first things first, I think the number one thing that we should be looking at is the US dollar, because this is, in my opinion, what's driving a lot of the risk on moves that we're seeing, not just in crypto, but in equities. We're seeing like Wall Street bets because more people are getting the stimulus checks. Right, with the United States citizens receiving that free money, they're going to be putting it in more speculative assets because they think it's free, like they didn't really work for it. So in my opinion, I think the overall sentiment and momentum is going to continue in terms of the US dollar weakening with the speculative assets, risk on assets, as well as sound money will continue to move to the upside with a little bit of a lag on gold and silver because of the high level of interest in cryptocurrencies, in my personal opinion. And I think it's definitely smart to be in that sector, in that space there. So going to continue on to the US dollar here. Thank you very much for tuning in. Looking at the monthly, this is a really long time frame. We're looking back all the way from the 1980s, we can see. And overall, I'm going to be taking a picture of this. We see a series of lower lows and lower highs, which totally makes sense. And this is a composition compared to other currencies that are also fiat. So looking at euro, Japanese yen, some European currencies there. But it's not like an exact replication of the strength of the US dollar compared to all assets, but just other currencies. But as the world reserve currency, when there is a lot of fear, uncertainty in the market, like we saw in the huge slam down in March, there is a lot of momentum coming into the US dollar because it is a safe haven out of the currencies as well as the Japanese yen. But overall, as we see this stimulus and overall low interest rates and dovishness come in my opinion, we're going to be continuing to see the US dollar move to the downside. So we do see kind of a similar structure from around 1990s to the break of the 2000s, and then here as well. Overall, we do see lower lows and lower highs, obviously. But this particular structure is the squeeze that we can see right here. We see a nice squeeze, contracting the volatility. We see a break, move to the upside, and then a massive slam down with a lot of aggression. And then we saw something similar right here, where we see a nice squeeze. As we can see, we got a nice push to the upside, double top, well respected. This is that huge volatile time that we saw during the start of COVID, February-ish March of 2020 there. Massive push to the upside initially because of the fear and a lot of people selling assets. If you're selling gold, silver, oil, any stock, crypto, you're going to be purchasing the US dollar. There's a pair, right? You're not just trading stocks or Bitcoin, you're trading it against something, which is primarily going to be the US dollar, USDT, USDC, whatever it may be for your stablecoin. But all of them are pegged to the dollar mainly, or the main ones that actually have liquidity there. So going to be continuing on to a smaller time frame, but just wanted to understand that major double top forming. We aren't exactly at that low yet, but we are coming close to it. I think we do still have a little bit more to go before we start getting to that possible demand zone. But overall, momentum to the downside, but there, in my opinion, is going to be some hesitation because of the demand from this major previous low, which was, as we can see, a pretty key zone back in the historic time frame as well. So that's where we are on a large time frame. Let's zoom in on a smaller time frame, and you can see this is that massive volatile period that we had in March of 2020. And then since then, since the interest rate dropped to 0%, stimulus coming to everyday citizens, checks getting sent in the mail, there has been a move to the downside for the dollar. Lots of bears coming in, lack of motivation from the buyers in the US dollar, which in my opinion makes sense. There were some people who were actually very bullish on the US dollar, looking at deflation, the velocity of the currency dropping even further, people losing jobs. In my opinion, that does make sense, but the Fed, I think, has proven themselves here that they will do whatever it takes, even if they're going to be inflating away the US dollar, not to have an economic crisis and a massive deflation like they had for the Great Depression in the 30s, started from the 29 era. End of 29 is when it started, when that initial crash occurred, and then the 30s was when it started, and that created the World War II crisis with Hitler coming into power because of the inflation in Germany there. So definitely, there's political situations that could come out of really negative outcomes with deflation, and the Fed, central banks around the world, are going the opposite route in terms of the two options they have. And instead of deflation and just saying, okay, debt deflation, uh, a lot of negative things, but a deleveraging, which is a positive thing in the long run. They don't want that. It's painful during the actual deleveraging, so they'd rather print and kick the can further down the road until they have to raise interest rates at a certain point, because the consumer price index, the CPI numbers, which is the cost of goods and services averaged out in terms of a percentage, time frame after time frame, when that gets to double digits and high numbers, that's when people start to riot. There's revolts because the cost of goods and services are just too volatile. They're going too high too quickly. And that's where people really start to rage. And that's what happened in Germany that led Hitler to power. So not great outcomes, but hopefully we can steer clear. But regardless, we do want to navigate in the financial markets the best we can for the potential situation, because I don't think the Fed will go the option where there's going to be deflation. I think they will continue the inflation because they will always kick the can down the road. And with modern monetary theory and in their opinion, ability to print unlimited amounts of currency and assume that there's not going to be massive inflation, it just does not make sense to me. Yes, you're the world reserve currency, but at a certain point, you can't just print unlimited amounts. It's not how currencies or really any asset works. So going on to price action here, a little bit smaller of a time frame. We saw a triangle break, continuation break, and this is the structure that we kind of are looking at right here that's somewhat similar. And let's take a picture of what we're exactly talking about. And even when we initially broke this ascending wedge right here, we did talk about quite a bit of volatility that could occur because there is a lot of momentum here coming to the downside, and that's exactly what we saw right here. Even though we broke this ascending level of support and this ascending wedge formation, there was quite a bit of volatility, and we actually saw the price retest the zone twice, and it kind of shocked me to see the price come all the way back here to retest, but it did inevitably come back down. We saw a nice squeeze where it was pushing against the support time and time again. At a certain point it broke, and once it broke, it really broke, and this is where we saw Bitcoin absolutely roar. Kind of start of October is when we really started to see it push, and then from October until really now, it's obviously been in a massive push to the upside in the, I guess, initiation of the bull run, because I do still think there's a lot left for BTC, Ethereum, and all of these alts to run within this bull run. So we'll take a look at that a little bit later. But when we're looking at the current structure, we see this ascending wedge that did break to the downside. That is the initial push that is starting the move to the downside, in my opinion. And then we're seeing a lower high because this was a high. We're seeing a lower high. We saw a small wedge right here that we thought could break to the upside, which it inevitably did. And then we saw the retest of this previous zone right here, this major level, as we can see, held perfectly. We saw a very, very well-respected wick candle closure where the wick blew above the zone, but then the sellers came right back in, the buyers pushed it and stuffed it back below this major zone. Let's just zoom right in here and then talk about it a little bit more, maybe on a smaller time frame, like so. All right. So what we could be expecting now, in my opinion, is a little bit more volatility, but from this point, I'm looking at this to be the lower high. So we could be seeing a quick move, a little bit of a consolidation, but we'll take a look at Bitcoin. In terms of the negative correlations, the US dollar, this is its relative high, so there's not much room to the upside until my theory is wrong, and then we're going to have to change our opinions. Maybe it's going to be coming up a little bit higher like we thought, but in this one here. But overall, we're going to be looking at this to be the lower high. So even if it trades and consolidates here, we're looking to see Bitcoin and altcoins start to rally very soon. In short, we are very bullish. Period. End of sentence. I could end the video right now, but we're going to go over different altcoins. We're going to be taking a look at Bitcoin dominance. But in short, that is the overall theory of this video, is we are bullish. We think that the US dollar is going to start to trade to the downside. This is its relative lower high from this high. We can see it's kind of the bottoming formation, right? And then at a certain point, it starts to make its way to the downside, breaks below the bottom, and then once it breaks below this bottom, in my opinion, we're going to have a deep push to the downside. There's going to be quite a bit of volatility here, but looking at BTC, looking at where it is, it's looking pretty phenomenal. Buyers are able to step in and hold that higher low. We'll talk about it on the price action when we're looking at BTC. But overall, in terms of the different assets that we are looking at, the US dollar holding this lower high, moving to the downside towards the 89.97 zone, and then potentially either forming a double bottom right here where we're going to go to the 89 and then moving to the downside. But regardless, from this point, we're going to be moving to the downside. There's going to be a lot of time, around maybe half a month. Obviously, it's around March 2nd. We're going to be, let's say, a week, 2 weeks. So during that time, there could be moves to the upside in the US dollar, but the overall direction from looking at the 12-hour, daily, 6-hour is to the downside. Lots of rejection, lots of sell pressure. We're going to be looking at leverage longs in crypto. Now moving on to the BTC chart, as well as the market cap dominance percentage, which is the BTC.D. Let's open up BTC first. That's just going to be looking at the percentage of market cap that BTC has compared to the rest of the alts. So a pretty big number. It used to be over 95% not too long ago. We'll actually take a look at it on a longer time frame, a little bit longer, a little bit later in the video. But first, we're going to be looking at Bitcoin. So looking at the 12-hour chart, let's just take a nice zoom in here. We did, in my opinion, call this pretty well perfectly here. In terms of the wedge, very similar to this one, a little bit more descending, but the initial impulse push did come to break our key zone of confluence. And in my opinion, we're setting up for a nice move to the upside here. Now, we did have an initial wedge right here that did break, and then we had our larger zone that came in. So we could see a push up and then a larger formation come in. Doesn't mean that we're going to see from this move up all the way to, let's say, 100K in one single move. That's not how markets flow, right? So by the end of the day, we're looking for strong initial pushes, depending on what you're leveraging, obviously. You only want to hold for so long because a sell-off is inevitably coming. Kind of surprising we haven't seen one that's greater than 50%. Like this one's kind of the deepest, which is at 27, not even 30%, which is not bad compared to what we saw in 2017. But when we're looking at the current price action, we just broke a descending wedge. In my opinion, we're going to be continuing to the upside. Looking at the descending wedge in terms of the potential target initial from that zone to this zone, using the geometry of the structure, and then we're going to see it's a little bit higher than that previous high, sitting at basically 60 grand, $60,000. And what we could be seeing is if we connect the higher highs like so, we could be seeing a massive second formation of some pattern. Right, we see maybe an ascending, huge ascending wedge, we don't exactly know, but that series of higher lows, if it does get broken, would very significantly shift the direction of this market. Because right now we are trading very aggressively, but obviously in 2017 we've had parabolic moves, and BTC has had somewhat of a parabolic move, but not really. It's been pretty stable. The 30K zone held oh so perfectly. We're able to hold that higher low very well above the previous resistance zone at around 41K. So market structure looks phenomenal, and we are winding up for that next leg up. If it does break the target and then retest, and then if we're able to hold it, let's just zoom in a little bit closer. If we are able to break to the upside, let's just take out some of these. If we're breaking to the upside and then retesting the 60K as a level of support, but we validated it going to the upside. We validated the series of higher highs as well as the geometry of this descending wedge, creating a zone of sensitivity there. If we're able to hold that zone and then actually create a maybe smaller version of this, like a symmetrical triangle, descending triangle, nice contraction in the price action, that would be a potential for it for another parabolic push to the upside, going at an even greater ascension to the upside compared to what we're currently seeing. The parabolic move would then be at a new trajectory to the upside. And then at a later point, we're going to be even greater in terms of the appreciation, in terms of percentages, right? And that's how these bull markets go. It's you got to look at the price action, and it's hard to understand why there's so much buy pressure, but bull markets have so much FOMO. And BTC is a global asset. It is not just a stock in the United States. And yes, stocks in the US are mostly international if you're looking at like blue chips or large cap. But in terms of BTC, it is truly a global asset, and really all cryptocurrencies are. So definitely don't underestimate it. I do think that next push is coming pretty soon. Moving on to a smaller time frame, let's look at the 4-hour, and then let's just quickly draw on here so then we have a good understanding of what I am talking about. So we saw a wedge that we initially formed right here. Very nice descending zone, very tight consolidation, contraction, very strong push to the upside, and then we got that big blow off, sell off that a lot of people were worried about. Oh my God, what if it's the end? Not at all, no worries. Right when we were holding here, where we were initially thinking, okay, it could be a smaller wedge where we're seeing initial blow off top, and then we're seeing our second wave that's a little bit lower, and then our third wave that's a little bit lower, our 1, 2, 3, right? And then we're going to be getting our lower lows and lower highs, and then we want to see that nice break and retest of the previous market structure as a new level of support. So that's going to be how we treat every single descending wedge when we're looking for continuational pushes to the upside in this type of structure, right? Simple. Obviously, there's situations where you want to trade descending wedges to the downside. Like if we're looking at the US dollar for that example, that was the second option. Instead of it breaking up, we were breaking down. But in this case, we were really looking to hold this nice zone of support. We got a nice squeeze of contraction, and we got our 1, we got our 2, we got our 3, we got our initial move to the upside, retesting this previous market structure resistance as a new level of support oh so perfectly, and it does look like we are going to be moving to the upside to hit this 60K target, as we can see right here. And then it's just a matter of if we're going to fizzle and then form maybe something like this, or if we're going to break and then actually retest and then move to the upside, like we can see maybe potentially something like this occurring, which in my opinion could definitely be the case depending on how the US dollar is looking. But we will take a look at other assets that also do look bullish that are considered risk on. Basically, the US dollar, in my opinion, is looking very weak. Unless the Fed and central banks are going to raise interest rates, which they will not unless they see the inflation, the CPI numbers, this will continue, in my thesis, in my view. If they see the inflation and the CPI and more people are talking about it, that's a worry. And the only thing that central banks really have in their playbook in order to try to slow the inflation rate is really just to increase interest rates to make it harder for individuals and businesses to acquire capital, which would then shrink the amount of capital created, which in my opinion is a positive thing, debt deleveraging, but it actually extracts the amount of money within a circulation and within an economy in the circulation, which is deflationary, right? When you're taking money out of a system, out of an economy, it is deflationary. When you're incorporating it and including it, like raising lowering interest rates to 0%, which would then make it really easy for people to borrow money. So then they do, which creates credit. And then if that salesman gets the commission, let's say for the credit that was created, that salesman goes, spends that money is now in circulation, even though it was created from credit out of thin air. So that's how the inflation works when you have very low interest rates, and then when you have deflation, when you have higher interest rates, because people have to pay back their loans because they have to pay more of it back, right? It's an incentive to pay off your loans when you have to pay more to even just have the loan itself. So moving on to a different chart, hopefully you have a good understanding of what we're kind of seeing here. Not really going to get into a smaller time frame. It'll come when it'll come. In terms of the initial push up, we are looking at this previous level of resistance right here to hold as a new level of support. This previous major top right here, so it is still holding, looking very well. If it does go below 46, which is this major zone, it might get a little bit dicey, but at the end of the day, we are seeing this major level hold as of so far. So if it does occur, if this moves to the downside, US dollar is going to be popping up above our previous high. And like we said, we will have to be reassessing the market. But as of right now, it's looking pretty phenomenal. So I'm not really going to be looking at any other options because this current option is playing out to a T so far. All right, so we're going to be looking at the not the US dollar, the BTC.D chart, which is the Bitcoin dominance chart. And let's take a look at the monthly time frame. We're seeing a pretty big contraction, but we saw not even too long ago, 2017, Bitcoin dominance was at 95%, and now we're sitting at 61%. Altcoins are absolutely exploding, which makes sense. There's so many more use cases for altcoins. Bitcoin, in my opinion, is a great store of value, but there is a ton of limitations when it comes to actual use cases. You know, smart contracts are an unbelievable invention and technology that BTC can't really incorporate. So things like Cardano, Ethereum, or Polkadot, Link, all these huge actual use cases that are implemented in the world or going to be implemented in the world in some cases are a lot more interesting. So I think there is a lot more opportunity there in terms of use case, but BTC is the store of value. So there will always be a portfolio real estate in my head for BTC, gold, silver, because those, in my opinion, are really important for this day and age when there is currency proliferation, not just in America, but globally. So moving on to the market cap dominance, we do see a contraction, and we're seeing a nice leveling off where we're seeing not much volatility like we saw back in September, August, really kind of before the pump really started back in October. October 2020 is when we initially called the BTC bull run, the cryptocurrency bull run, when we broke out of our major symmetrical triangle. Hopefully everyone remembers it. But we could be seeing, like it making sense, a little bit of consolidation, right? Totally fine. I don't mind waiting. But a next move where BTC initially taking charge, but then altcoins rally. But this time, instead of it just moving to the downside to where it initially began, we could potentially breaking this level of confluence around that 59-58% zone, which then would then turn into, in my opinion, a cascade of sell-offs for the Bitcoin dominance. As we can see in major bull markets, we see massive shifts to the downside in Bitcoin dominance, meaning altcoins are appreciating at a greater rate than Bitcoin, at a much greater rate. Remember back in 2017, everyone was crazy about Bitcoin? Well, altcoins absolutely killed it compared to Bitcoin, looking at how much of a market cap increase there was compared to Bitcoin, looking at altcoins, right? There are many of them compared to one single asset at BTC, but it just, charts have so many, in my opinion, it's pretty unbelievable. Looking at a chart, it says 1,000 words. In my opinion, we're going to be moving to the downside in the next bull market. It's just a matter of time, and we're in a nice consolidation where we could be in for a little while. We see a nice contraction. I don't really want to draw a nice squeeze here because we could just be consolidating here for a little while. But overall, we are seeing a hold. I think BTC will take the lead initially, and then we'll see altcoins really start to run, and then this consolidation will inevitably break to the downside. I do not think we will be passing 65% again. So this would be for the nice head and shoulders for anyone. Let's maybe go to, I think we're sticking to the daily might be a good option. Hopefully everyone can see this nice left shoulder, the head right here, and then the right shoulder. So we could see a little pop. Like, I don't think so. We're seeing wicks. I think altcoins are really holding well. So this is the head and shoulders that's going to break this zone, right? We saw a move, a big slam down, Bitcoin initiating the bull market. This is the October zone when BTC really started to ramp up. And then we're seeing altcoins follow afterwards. And once BTC initiates, altcoins are going to absolutely fly. So that is my thesis. And in my opinion, it is looking like it is sticking. So I was pretty heavy BTC, but I do think as of now, if we start to break a little bit further around 60.59, smaller, more speculative altcoins that have proven themselves, that are still in the top 20, that have a little bit more utility, would definitely be something to look into, in my opinion. BTC is always a great, I can't, well, I guess you could say always a great bet, I guess, in terms of store value. But if you're looking just strictly for ROI and opportunity, BTC is solid, but there are other horses in the race that could be running at a much greater rate. They will burn out and die off faster, not to zero, but like at a greater rate. BTC will hold its value better than most compared to the altcoin market, or most competitors in the altcoin market. But in terms of appreciation upwards, obviously, like stocks, smaller cap, more speculative assets and projects have a higher ROI, although they have a higher risk that you do have to incur. But that is the head and shoulders. That is the thesis. I think we will see a slight consolidation, but the move to the downside is coming. The head and shoulders formation, where you see a failure to make a higher low hold, you get a slam back down, you get a lower low, and then you even get a lower high from this one. So bears are really trying to push this down, with altcoins getting ready to ramp up, is what the chart is telling me here. So that's going to be the overall direction, in my opinion, for the BTC dominance as well as Bitcoin. So we're going to open that up. And then we'll quickly take a look at the SPX, which is this guy right here, which had a little bit of a fake out. I'm just going to get a little bit of water. But it is holding. It held this around 38.60 zone very well. We will talk about it. You're going to get some H2O, and then we'll jump right in. All right. So this was the initial descending triangle, which was holding, and then it broke down, came back up, which a lot of people were buying calls. This is the put-call ratio, the PCR. When this is very low, there's a lot of people buying calls. Whether this is very high, there's a lot of people buying puts, which indicate that there's a lot of people that are indicating and thinking and speculating that the market's going to go down. When there's a lot of people buying calls, which there was here, there's a lot of people who are thinking the market's going to be moving to the upside in terms of the options for the SPX. So there have been a lot of buy pressure. There's been a lot of speculation that the market's going to be moving to the upside, and it has been. So there's been a lot of money to be made in assuming that the Fed is going to continue the overall sentiment of dovishness, where there's going to be tremendous amount of stimulus. Interest rates are going to be kept where they are, at the lowest point they've ever been, slammed to the ground, kept there. No breath, nothing. They're staying at the lowest they can. And some countries obviously are at a point where they are having negative interest rates, which is pretty crazy, but I don't think the US is there at that point. So I think this is going to be continuing. The next zone that we are looking at is this area. Not really going to be seeing a potential break until we see a continuation and then maybe a validation of a previous resistance. Like, this was the initial break and it came right back down. It was a pretty big slam right back down. But if we see a hold, a retest of a previous resistance to a new level of support on a smaller time frame, and then we see that next leg higher with that higher low holding, that might be a great option where we are looking at risk on assets. But this is a good indicator, in my opinion, for overall global sentiment. It's not just the United States citizens and funds and firms that are investing in the SPY and the SPX. It's global. So it's a good understanding of global sentiment for risk on, risk off, in my opinion. And right now, like it always has been for the past, really, since the lows of, let's say, April, it has been extreme bullishness because of the dovishness. A lot more volume coming in, a little bit interesting, but overall, until we start to see major sell-offs, like we can see right here, I think we're just going to be keep on going. So even if we do see a sell-off here, like we've gone through the worst. You can't imagine a worse situation to be in as an economy where things are shut down. The velocity of currency is extremely low. No one's leaving their house and doing activities, right? The amount of circulating, amount of the units of a single dollar circulating within a time frame, let's say 24 hours, is the velocity of currency. If that slows down, there's deflation, which then stock markets move to the downside, real estate, crypto would, even gold and silver, and then the US dollar would triumph. And that could have been the case, but is definitely not the case at all. Even when we saw GDP move to the downside 2 quarters in a row, so then it actually was technically a recession, but it was the fastest recovery ever. And in my opinion, it was a fake recovery because they devalued the dollar so much. So they know that people are going to assume that they're richer, thinking that the number of digits on a screen is greater and greater. But that is inflation as well, although right now it's just in the financial assets that is currently inflating, which is not a bad thing for the people who own them, to be honest. But I think inevitably it will come into the CPI and come into the everyday goods and services, which will hurt people, which is not their best. But central banks don't really play a positive role, to be honest. So we're going to be moving on to a different time frame. But overall, I think that this contraction will continue. Maybe we might see a little bit of a lower high, and then we might be doing something like this, where we're holding a nice higher low from this low, with a little bit of a sell-off there. But I do think that this overall structure is going to continue, and then we're going to be seeing that next leg higher, kind of like we saw right here. This was a little bit larger, but we saw this nice squeeze like so. And then we saw a nice leg higher, which was a little bit sketchy because it's just trending up to the downside, chugging away. And then we could see another just chug away kind of formation, breaking market structure, but then holding. Don't really like this. I wouldn't really trade this, to be honest. This is pretty weak, but it's able to hold to the upside. It's not a great market to trade. I wouldn't really like doing that. But I'm not trading the SX or SPX, so that's not a bad thing. Overall dovishness. Overall sentiment is bullish, going to be moving to the upside. After this descending zone breaks and a little bit of a continuation, I think it will continue creating and opening the possibility for alts and BTC to run. All right, so now we're going to be looking at altcoins. Hopefully this has been interesting, that you are continuing to enjoy this so far. We're going to be taking a look at Binance Coin first, actually, and then we're going to be moving on to Uni. These are the two, well, somewhat similar, but also very different. Obviously, one is centralized. A lot of people do hate Binance because it's centralized and they do have a lot of power. Unlike Uniswap, that is decentralized. You know, you don't have a central entity have the ability to control its inner workings, and you have issues with privacy, and there's some negatives that go along with it. It is kind of anti-crypto, to be honest, if you really look at it and think about it. But hey, it is what it is. If you want liquidity, it is there. Although Uniswap is really gaining liquidity quite quickly. So when we are looking at this major potential structure, if we are going to be seeing a slight consolidation, we did see something very similar where we saw an initial slam down. There was an initial squeeze like so, and then we saw consolidation, and then a longer squeeze like so. We saw our 1, 2, 3, right? 1, 2, 3, and then we saw our impulsive move up. So this could be the first one. So hopefully everyone understands. Let's take our picture and talk about BNB. So this is our first initial push. We see our second one, and then we see our third one making lower highs, and then we see our nice ascending zone right there, and then we get our massive push to the upside. What I'm thinking is this could be the first move to the upside. We could see something like this, and then something like this. We don't exactly know, right? Or this could have just been, boom, that's the zone, and then it's going to be moving to the upside. But I would be very hesitant because it's already been up so much. In my opinion, there are other assets like Ethereum that just hit its $1,400 zone, which looks in a really good spot in my opinion. But I would say this looks a little bit too similar to what we saw right here. Having some consolidation with BTC and alts, in my opinion, would not really be too much of a negative thing. And then if we're able to maybe get even something like this, and then we get our nice ascending zone, and then we're getting our move to the upside. So I'd be looking for either two options. I would say right now is a little bit too ascending, like if we're looking at it like so. I'd say you'd want to see a little bit more of a structure form. This is a little bit too early. This is like the first initial pullback. We're going to get some consolidation, in my opinion. The US dollar has yet to really make a move to the downside, and I think the next move for Binance Coin is to come after that initial push. And even if you are looking for longs on BNB, I'd like to see it break this previous major structure of 266, which is a previous support right there, before even attempting to look for opportunities. But if you are looking, let's take a geometric right there, and then get the ray. And then if you're looking at risk rewards, if it does break and then retest, you're looking at that to be your potential zone, and that would be your potential stop loss. And then you got TP and stop loss. So you're looking at like 3 to 3.5 in terms of RR just for your first take profit, your target zone. And then if it does break and retest, you'd be looking for either to add on or just hold on to at least a little bit, because it could run even further. So that could be one option, which could be a possibility. In that case, we would really like to see the US dollar start to fall and move to the downside quite aggressively. We want to see BTC start to make a new higher high, and maybe possibly in that same time frame, if we start to see the BTC.D chart start to move to the downside a little bit, with altcoins not BNB start to really rally. And then if it's starting daytime, if we see the S&P really start to do well, obviously that's all giving that bias of bullishness, risk on sentiment, and then we could be looking for opportunities. And then if we are unable to make that high, the next opportunity would be something like this, where we're able to see a series of higher lows, create a nice ascending trend line, and then we get a nice bottoming formation, which does work really well in these nice bullish momentum moves. A little bit too early here, like if we go like that, unless we're moving to the downside. I don't think that's the case. So then option number two might be something like this, in case if it does consolidate like we did talk about. But if it's going to create that nice market structure higher high, definitely would be looking out for it. We've already seen that high relative volume come in, really distinguish that buyers are in control, still are in the market, which I absolutely love to see. So we're going to be moving on to Uni. All right, and then moving on to a 4-hour chart. We initially did talk about a potential fib structure that was forming right here, but there was a little bit of a sell-off, held that zone, but it was quite aggressive, to be honest, when you were leveraged trade. But it did play through in the end. It didn't go all the way up to the major zone, but it did go up to the initial target, which was right here, and then it held above the zone. And then the stop loss took out the trade for the rest. So then it held that zone, looked really well. And then once they made that lower high, that was where the stop was. So the rest was avoidable for sure. But that was that trade. And then looking onto what currently is within the market, we see a little bit of hesitation to make a higher high. And then we made a big move up. And that's where the initial trade was. And then we got stopped out, like we said, at that higher low. Made a big move down, still held the series of higher lows, and then we're now contracting very, very tight, where we see a series of higher lows and lower highs. After very tight, long contractions, what do we get? Massive expansionary pushes. So I think Uni is going to be moving to the upside quite soon here. And BNB, a little bit of hesitation. We've already seen this major third low get broken. See the difference with BNB compared to Uni. We see that zone already broken, that 1, 2, 3rd high, that major high, previous resistance. As we can see, this zone is a previous level of resistance and support. We could go like this, but I'm going to be looking at this major zone. And then for this, You could be looking at that, but I'm going to be looking at this major zone because this is kind of the middle of the structure there. And this is the third zone that it has touched, similar to what we can see right here. So that's going to be the overall outlook for Uni. In my opinion, it does look a little bit more bullish than BNB, Binance Coin, but this has rallied. I own both, so I don't think it would be a bad thing for them to both rally. I think they will in time. But in terms of what could be going on next, we're seeing slightly the same level of a low, but we're seeing higher lows, indicating buyers coming in, swooping into the market, and purchasing the coin at higher prices. Uni is a very interesting project if you don't know about it. It's actually based off of the Ethereum network, which is actually very cool. So now we're going to be moving on to two different altcoins. We're going to be moving on to DOT as well as Cardano. Cardano does look like it is forming a very, very nice structure. Actually, let's look at Cardano first, and then we'll look at Polkadot, and then we will complete this video. So this does look like a very solid descending triangle. We do see a nice contraction within the volume, like we can see right here, contraction in volume with the descending zone right here, right? Contraction, 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 and then you see massive injections of buy pressure. You see contraction, contraction. You can see it right here as well, right? Contractions in volume, contractions in volume. This occurs especially when you're seeing these nice bull markets. You want to see these contractions because after major contractions creates massive expansionary pushes. And similar to what we talked about with Bitcoin, we see this nice trending zone that we can see. And then maybe if we can create that high, maybe that high, this zone maybe right here. Maybe not perfect. Maybe that's going to be the zone. I would say it's a little bit of an amp. It's an opening, which I don't love. It'd be nice if it was a contraction. So that would be the two structures that I would look at, which isn't absolutely great, but we're currently mainly just looking at this zone, previous level of major resistance, new level of support, as we can see. Contraction within not just the price action, but also the volume. Lots of buy pressure coming in, more than the sell pressure, indicating volume accumulation still occurring within the market. In my opinion, a lot of indications telling me that Cardano is moving towards the upside at the major level of just over $1, which is holding as a strong level of support. If it does break to the downside, we do see that lots of wicks are indicating buy pressure holding up the price of ADA. So this could just continue moving to the downside here. And then if we take a quick snip, what we would be looking at a later point is, let's say if this zone does not hold and we get a sell-off, we just continue to see this zone hold as a resistance, and then we're going to be looking at possible opportunities to hop in with this ascending zone, creating that series of higher lows. So then there's going to be that deeper contraction, and then we're going to be looking for that nice push to the upside after this move is complete, and it is clearly indicating that it is forming nice market structure. As we can see, nice higher high, higher low, holding previous major levels, and then a higher high. You're going to be looking to hold these higher lows on a smaller time frame before the next move to the upside. So that's going to be the opportunities we're going to be looking for Cardano. And then the last thing we're going to be looking at is Polkadot, which is also a very interesting project. So these nice bottoming structures I really do like. The final zone is going to be 41 to hold, but in terms of where it has broke, I think it's already broken. I think it's a buy. If you're looking at the two structures that we are looking at for squeezes, we've already broken both of them. So that's the resistance. This is the support. That is going to be green. Initial break was the descending triangle. So let's take a picture. And this is two indications that buyers are in control in the market and looking to absolutely purchase any dip. Those are the times where it's going to be absolutely rallying, because any dip down, obviously people are going to be buying, it's going to be moving the price up. The bid and ask is what moves the price, right? Market cap, news, yes, but bid and ask is what moves the price. And then if people are seeing a lot of buy pressure, that definitely drives more FOMO, more incentive to purchase. So the first indication was this zone right here. You see Candle closure, perfectly. Not perfect, but on a larger time frame, candle closure, absolutely perfect here. We saw initially a descending triangle, break to the upside. Indication number one that buyers are still in control. Obviously higher lows indicating buyers are still in control as well, which creates our ascending zone. And then the second indication was this symmetrical triangle, break to the upside, right? Right here. So let's take out this. Like so. Second indication, symmetrical triangle, break to the upside. We're seeing it start to rally right now. Or previous resistance, new level of support right here. And I think once it breaks below 38.39, it's going to start to move to the upside. So I'm very bullish on Polkadot. Not a ton of volume coming as of yet. But even if you're looking at a larger time frame, it's just looking super bullish. We've seen long consolidation, long drawn out, nice triangle, as we can see. And at this point, we are just making moves to the upside, in my opinion. US dollars moving to the downside. We're only looking for continuation patterns. In my opinion, it's already broken, retested major levels of sensitivity. It is looking really optimal for a potential move up. And that's what we're going to be looking for. So that's the video for today. A little bit longer. We did try to cover quite a bit of different assets and topics all in one video. If you thought this was useful, if you thought it was educational, if you like the ones where it's a little bit shorter and I'm covering like single sectors, like I'm only really doing, let's say, commodities in terms of gold and silver, or a look at just crypto. We did a little bit of everything. We looked at some SX, we looked at some dollar, we looked at some stock indexes, or at least one. We looked at some put call ratios. We looked at BTC, alts, Bitcoin dominance. So hopefully you enjoyed it. Give it a thumbs up. It really does help us out in terms of the exposure. I'm really happy that we did get over 1,000 and a little bit now in terms of viewers. So I really enjoy making this. We will be coming out with a Performante podcast soon. Me and Nathan enjoy those as well. So thank you very much for listening and tuning in. If you do want me to cover any of the alts that you want me to cover, just message me on Discord or drop a comment in the YouTube comments here, and then we can definitely do that for you. So hopefully you enjoyed it. Hopefully you're making good money in this market. Pretty unbelievable gains to be had, I think, even in the future. Invest wisely. I think it is the time to speculate. Don't play it too safe, but also don't be stupid and leverage too much. Just playing with normal, non-margin, spot, just holding an asset in this market would not be a bad thing, because you know the 20% dips, if you're leveraged 5 times, you're done. You're donezo. You're out of the game, right? In that account, and that is not something that you want to bear. So always, yes, leverage is absolutely unbelievably powerful in a positive way, but it can bite you in the ass if you are not careful. So keep your money invested in places that will grow. Don't blow accounts, especially when it's a bull market, because that money could be used to make more money. Everyone's going to eat. Let's get the spread. Thanks for tuning in, everyone.